I remember hearing a speaker that was badly injured in Vietnam. His face was half gone from a burn. Lieutenant colonel or higher. Great guy. I really enjoyed his conversation. But what I remember him talking about is the word fear. And he said fear stood for false evidence appearing real. Ladies and gentlemen, you have a tax code. I have a tax code. It's the same tax code. Now, I will tell you there are two tax codes. But it really is one for the informed and one for the uninformed. And I genuinely believe there's a lot of fear that goes on in this world about being audited so that people don't want to take the deductions and the opportunities that they have in the tax code to their advantage. They sit back idly out of fear, false evidence appearing real, over things called tax audits. We're going to talk about audits today on Consider This Program and help remove some of that fear. Well, good morning and welcome back to Consider This Program. I am your host, Joe Clark.
And I'm Grant Soliven.
Hey, we are talking on this entire program today, and remember, if you missed it, not all segments are available on the radio. We only have a few of them that are there. You can go to our podcast, anywhere you listen to podcasts, Consider This Program. You do have to put in the word program. And of course, you can catch us on other radio stations. You can also go to considerthisprogram.com and catch any segments that you happen to miss. Here's what I know. There are two tax codes in the United States, and many people think that's one for the rich and one for the poor. It's not. It's the same tax code. Yours, mine, Grant's, everybody else. What there is, however, is a tax code for the informed. Here are the rules. Here's how they work. Here are the boundaries. Here's what is black. Here's what's white. Stay out of the gray, and certainly don't go into the black. The second tax code is for those that are uninformed. Well, I'm going to add with that today the people that are fearful. There are people that will not get anywhere near what the IRS allows you to do from a tax perspective, and it's to the detriment of their own financial journey and that of their heirs or their charities, depending on who's going to get the money when they're gone. We want to make sure that you are using the best guidance, not old-fashioned wisdom, but the best, most up-to-date guidance with the tax code of 2021 and 2022. What it is that you need to do to put yourself in the best situation. Grant's going to talk you through what an audit is, how it works, and hopefully we'll be able to answer some of your questions. Most importantly, hopefully we can get rid of some of that fear.
100%. And Joe, I'm going to kind of dive right into this. I'll start here. Getting audited by the IRS, I think you have a greater chance of getting struck by lightning. And I don't say that as a joke. I actually say it as a truism here. Think about this. There are so few IRS agents out there, and I'm not telling you this so we can start living in the gray and doing naughty things in the red, Joe. I'm not saying that. But for families that are using the tax code to their benefit and getting the appropriate help with tax planning professionals like our group, a good CPA, the reality is you're not going to get audited. It's very, very small. And
So let me break that down.
Go ahead.
There's two different types of audits. There's an in-person audit.
yes.
And I don't know about as often as getting struck by lightning, but I have been audited once. That was when we had the diff, which you're going to explain in a minute. It was back in 1987. Haven't been audited since then, and from an in-person audit. Now, on the other hand, there is the electronic audit.
Yes.
And that's when you fail to turn in a 1099 or one of those, and they send you the cute little grant letter that says, Grant, apparently you didn't pay income on this $100 1099 from your life insurance policy or something of that nature. Here's the interest. Here's the penalty. Please remit a check. Right? That one you get a lot. If you don't report income, remember they have computers and they're good at this game, right? So that one is different. That's not like lightning. That's being like struck by a rock driving down the road, on a gravel road. It's likely if you do not pay taxes on income that you're going to get that dear grant letter.
Well, and for me, and this could be a difference of opinion too, I don't consider that an audit. That, for me, it's I forgot that. And it's easily, if you forgot a 1099, you can say, oh, you know what? I forgot that. You're right. Here it is. Here's the taxes I paid. Oh, yep, you're right. And they re-amend it.
In psychology, we call that framing. By the way, you have framed that not to be an audit. The reality is that was an electronic audit, right? They caught you. You paid the taxes. But you can feel better about it. But you're right. The in-person audit, not so much.
Not so much. And here's the thing. And I want to get to this, Joe, because when we were prepping for the radio show, you said a comment, and I thought it was very, very powerful for our conversation. That is, when you don't report income on purpose, that's criminal. And yes, they're going to find you eventually. Taking extra deductions, you get maybe a penalty. But realistically, when you're working in good planning, you have nothing to be afraid of. I mean, Joe, we serve almost 1,100 families. How many audits have we seen?
Last year, there were none.
Right.
The year before, there were none. The year before, there were none. Now, that's the in-person audit part we're talking about, right? But that's the big part of this is actually doing it right, and that's why you really have to have your CPAs.
Mm-hmm.
But this is also where, and this comes from our Slack group, it's where you have to be careful. We always pick on the biggest law firms, and sadly enough, some of the biggest CPA firms that venture into that gray, right? I mean, the IRS will say, don't do this, right? And then you have smart people that will sit around the table, drink coffee, smoke cigars, and maybe scotch, and try to figure out a way to circumvent what the IRS clearly said, this is not our intention. Right? Mm-hmm. And you'll find things in tax courts. Yes, I do spend about 4 days of my life reading private letter rulings each year. I just spent 2 days doing that about 6 weeks ago now. And part of that is looking at things where people clearly tried to circumvent a problem or a challenge to try to be able to get around it. Right. There's a guy with $5 billion in a Roth IRA, and he did it perfectly legal. Right? It's called the Thiel case. They went after it, perfectly legal. There are other cases where people tried to hide $1 million into a Roth, and they lost the entire Roth. Mm-hmm. The taxes and penalty and the fines were as much as 80% of the amount of money that they put in. Right? So you really do have to be careful.
100%. And this goes into, I'm sorry to kind of jump back on this pony, Joe, but this is why you need good tax professionals, a good CPA that has good ethics and respects that, isn't sitting around that table with that scotch trying to find what we would call, it's funny, in Australia, by the way, side note, they call things schemes, as it's a positive. Right? Here we know that's not necessarily the case. We use different language. So you don't want someone who's scheming, right? You want someone who understands the code and is going to be working in your benefit in that way. So having good tax professionals, we have a great group of CPAs and quality groups that we work alongside on a yearly basis that help us do good planning. So find that good group.
It's important. I had at least one Australian student at Purdue when I taught, and I remember him doing his report on a retirement planning scheme, and I'm reading this going, what have I done? And he had to explain to me, so I had to explain to him, if he's going to work in the States, thou shalt not use the word scheme.
Thou shalt not scheme.
That is very, very true. But just because a major law firm says something is okay, or just because there is documentation out there, you've got to be very, very, very careful in terms of what's there. It's pretty clear what is white, what is gray, what is black. Just try to stay out of the gray. But man, use the opportunities that they're there. Understand what we talked about in the last segment about bracket bumping, what tax bracket you're married to. Make sure that you're not sitting there with a bunch of assets that could be tax-free just because somebody's not paying attention, is asleep at the wheel, as they would say, or doesn't understand how the tax code works. So Grant, I don't know where you want to go, but I thought we could talk about the history of how audits used to work and kind of what happened.
Sure, yeah.
So years and years and years ago, and this is really what happens. You've heard me talk about Benjamin Franklin saying that most men die at 25. They just wait for their bodies to catch up, right? And so people come up with an opinion, and unless, in Franklin's argument, unless it was about your hobby or your work, you really didn't accept new data and new changes because you really weren't around it. So most of us have already made our religious, political affiliations, our decisions, and many things that we have out there. Taxes would be one of them. So when I was audited, we still had this cute little thing called the diff. And what happened, and actually the diff had gone away, but there were still enough auditors that were out there that were still working. By the way, mileage was what I got audited over. It just really, really killed me. I made $18,000 that year and was audited. And it was amazing. Anyhow, the diff used to go through and pull out 50,000 tax returns arbitrarily, allegedly. And what they would do is do a line-by-line audit, which rarely happens in an audit. But they went through every line on the tax return. So some people were farmers, some people were truck drivers, some people were in the financial services world, some were doctors. A whole host of our U.S. economy. And then they would try to find collective problems. So problems means that cheating.
Right.
So they would see that the medical practices were doing this particular thing, way too often on their tax return. And so they went looking for doctors that had taken that deduction, so that they would go in. It was very, very progressive. And I mean, just very, very, very painful. That system was totally thrown out. They don't do that anymore and profile people. That is not the point. When you get an in-audit letter, if you get an in-person audit, do not represent yourself. I will tell you that. That person who's sitting in front of you has to be able to justify their expense in sitting in front of you. So you either need to call my friends at Step Doctor and Company, the Link and the team up at Huth Thompson if you're the Lafayette marketplace. You need somebody who is a CPA who can sit down with that auditor and be able to explain your story and make sure that you're telling the story correctly. Obviously, from doing all the tax planning that I do, there's a pretty good chance I could probably fill out my tax return. You need to understand I have never filled out my tax return. I've always had a CPA that has done that, since I've been in business, because I want a CPA's name at the bottom who has another attestment that what I've put on there is accurate, right? That is one of the ways the IRS looks at it. When you self-prepare, it's you telling the story, right? When you have a CPA, that CPA's job is to confirm your story. Here's the stuff that you took out of the 529 plan. Here's the investments that you made. It's just a second way to be able to look at it. So when we look at audits, I really believe an IRS audit, other than the electronic one, is more of a false evidence appearing real fear than it is a reality for most of us. Where I do think you should audit is those 5 critical elements that we talk about. Audit your life after work. What's it look like? Audit your annual tax plan. What are you doing proactively? What are you doing to make your life better from a financial standpoint today and tomorrow? Audit your investment playbook. What got you here? Why do you own that? What's it look like? Audit the things that happened in your life last year that are only going to happen maybe once or twice in your life that happen to people like me all the time, because we have 1,100 families that we take care of, the good, the bad, and the ugly. And how do you audit your estate plan? How do you know your documents are up to date? How do you know they say what they're supposed to say? Give us a call at 800-928-4001. Get signed up for your Next Steps meeting. It's free, complimentary, and we're looking forward to meeting you soon.